It's indeed a pleasure to be here. Thank you, Mr. Chhatwal, for inviting ET now. It's absolutely an honor to be here. The mood here is absolutely electrifying. I think electrifying is the word when I'm trying to assess the mood of the conference here. Now, personally and professionally, I've had the pleasure of tracking the Indian hotel journey for almost a decade now. And it's been a story of reimagination, from the throes of survival at the peak of pandemic to a comeback and to flourish now. I mean, Indian Hotel has taken, or the Taj brand has taken the Indian hospitality to a different benchmark. And if that was not enough, the shareholders are also very happy because the stock is at an all-time high, and employees are also very happy because profits are at an all-time high. So it's just been such an incredible period for Indian hotels that, being a television commentator, I've never seen such a good time. And I sincerely feel that this is just the beginning. But for Indian hotels to do well, the Indian economy has to do well. While Mr. Kant has really laid the foundation of how things are moving in the right direction, but as journalists, we are critics. If somebody says good things, we have to find the bad things. And if somebody says bad things, we have to find the good things. But sometimes as journalists, we struggle that if there are no bad things, what do we do? Focus on the good things. Focus on the possibilities. Focus on where, how incredible India would move. And you can see India is changing. And my friend here, Ridham Desai, I think he's also changing. Ridham, how many years we've known each other?
20 years.
20. And why are you doing this to me?
Sorry?
Why are you doing this to me?
Why?
Ridham Desai has started going out and recording interviews with Nandan Nilekani. He is trying to be an anchor, but I cannot be an analyst. Then he sends me a WhatsApp. I don't reply back. He send me a feedback, Nikunj, on this interview. So India is changing indeed.
No, Nikunj, I can't take your position, okay? You're still the best anchor in this country. I just tried to toy around.
So that's the change we are talking about. But on top of that, the gentleman on my right side, just focus on it. From Incredible India to Startup India, he's written a book in the middle of this G20 commitment he has. So if I say that there is nothing Amitabh can't do, would you agree with me? So, Mr. Kant, the journalist in me wants to know that while the setting on the table is absolutely breathtaking, political stability, stable interest rates, forex reserve, world is shaking, and things are looking up. But good comes with bad. Life, कहते हैं ना, उम्र के अलावा जिंदगी में एक तरफा कुछ नहीं बढ़ती है. So what, to your mind, could be the biggest challenge for India to move from 3 trillion to 5 trillion and eventually to 10 trillion?
Well, there are several challenges. And first and foremost is that, to my mind, if you want to be a $10 trillion economy, and we must understand that, growing at, first of all, our ambition and our hunger should be to grow at higher rates. We must grow at 9 to 10%. 6.5 to 7% is not adequate for India. I'm saying this because from 60 to 90, South Korea grew at 9.6%. Taiwan, between that period, grew at 9.4%. China, between 1990 and 2010, has grown at 10.1%. And therefore, whatever the global scenario, I think we need to first continue to keep making reforms, keep making restructuring your economy constantly. Secondly, I'm a great believer that you need 10 Indian states to grow in double digit. The center has done its job, but you need states of, Bihar, UP, Jharkhand, Chhattisgarh, Madhya Pradesh, Rajasthan, all to grow at 10% plus. They are still, their GDP is still low. So if they grow, the country booms. The country booms. The power of growth will be enormous. Thirdly, I'm a great believer that urbanization is critical. Sustainable urbanization, well-planned, sustainable urbanization can be the very big driver of growth. And fourthly, India needs to fire on all its cylinders. Manufacturing must grow, agriculture productivity must grow, services should continue to grow, but urbanization should grow. And fifth, lastly, the last point I want to make is that you can't grow at those high rates without improved learning outcomes, which are very important. Learning outcomes are still very poor. Health outcomes need to improve, and nutritional standards need to improve for the entire country, because you need growth with equity. That's very important in India. So these are the challenges for each one of us.
Mr. Kant, but in today's flat world, when everything is connected, we are the fifth largest economy in the world. We are the fourth largest stock market in the world. Can we grow in isolation? We know the messy spot the world is in.
No, we have to be a very integral part of the global supply chain, and that's why I am absolutely clear that India must integrate itself more and more with the global supply chain. That would require you to become the lowest cost, productively become the most efficient economy in the world. The world is looking for alternative locations. If you look at the top 15 companies of United States of America, 90% of their production is still coming from one country. You need to demonopolize that. And that will not happen because of geopolitics alone. These manufacturers will keep going back there unless and until you don't become the most efficient economy. And that would require major structural reforms, labor, land, constant easing up on no law should be. I've been a strong believer that no form should be more than half a page, no rule should be more than 1 page, no law should be more than 2 to 3 pages. There should be no human interaction with any government officer. It should be all digital interaction. So continue to work on making India the easiest place to work on. And that's what Prime Minister believes in, and making your infrastructure more and more robust. That is what Gati Shakti is all about, what the Prime Minister's drive. So focus on infrastructure, focus on ease of doing business, focus on all these areas and make India the most efficient economy in the world. That's how you'll become a part of global supply chain. Nobody will do it for charity.
Yeah. That's such an important point what Mr. Kant is bringing out. We tend to underestimate what's happened during vaccine distribution, the Aadhaar stack, the digital stack, and we'll talk about some of those points. But Mr. Kant did indicate that it's all about getting efficiency in the system. India is changing. Ridham Desai is still trying to mere pet pe laat maar rahe hain. But Mr. Chhatwal, thank you very much. You don't have a robot who's moderating this panel. So thank you at least for that. The Indian hotel still values humans and anchors and moderators. So once again, thank you for that. Mr. Chhatwal, exactly 5 quarters ago, when we spoke to you after your result update, your outlook was cautiously optimistic. Then 3 quarters ago, it was optimistic. Now your outlook is excited. What has changed in the last 5 quarters that the headline of your commentary has changed?
A lot has changed. But I think it would be the right time to say Vasudev Kutumbakam. That is giving this 300 plus meetings that are supposed to be happening. And that is showcasing India. So it's all these images that are going out. One is feeling proud of what we are doing, but more importantly, the positioning of India on the global map is going to get us investment, is going to get us people visiting us, and very good for our sector. There is one sad part though. Yesterday, Mr. Kant was not here, but I did mention a lot that the indirect beneficiary of infrastructure investment at the highest level is our sector. But I don't understand why we cannot give the sector infrastructure status at the center level. If that was to happen, then from excitement, we will rise to the level of superly excited. And I always said that in your channel, and I still maintain the best is yet to come. And I'm a firm believer, very optimistic. always about the outlook, but more importantly, this time, with a little bit of dips, as we had Mr. Thakur present yesterday, some dips will come here and there, but we are on the path of growth, and we are in the part of what I would say thrival for the sector, which means more jobs, which means more indirect jobs, and which means not a 1 trillion contribution by 2047. The likelihood, it's very difficult to say, when you put very high goals at the go, people don't believe you. But I actually personally believe the contribution of tourism sector to India's economy at 2047 will be 3 trillion and not 1 trillion. 1 trillion is the official goal that has been given, but I think the way things are going, it will be 3 trillion.
So when you say best is yet to come, what is the definition of that best?
That keeps changing. Just like it keeps changing between analyst and moderator, the definition of nothing is constant. So the definition keeps changing. Today, the best is that we as a sector are starting to make money. Today, the best is that the rates are going up. The occupancy is up. It's still not. Actually, I don't mind sharing with the audience. I was last week in Paris. I thought I could get in Four Seasons a friend and family rate because one of my dear friends is the general manager. He said, yes, that's okay. So the friend and family rate at Four Seasons, George Cinq in Paris, is 750 euros. Their average rate is 2,300 euros. So, and we start, getting very nervous at 20,000, 25,000 rupees. If I divide that by, it's like 210 euros. So Sindhu and I, we go often to, or we have enough to do with Germany, and we are going next month also, right? We have our annual trip of the IGCC, and despite all my personal connects, the rate that we have got in Frankfurt or in Heidelberg is around 300 euros. So 300 euros is again 27,000-30,000 rupees as a special rate. So I think the outlook for the sector after all the hit of COVID is good. And that's why I say the best is yet to come.
Okay, now let's look at the real news, the real world we are living. And the real world is that the tech sector is going through a curve. We get headlines of Google or stroke Alphabet. We get headlines of Microsoft. The tech world is going through a shakeout. How do you see that impacting India's growth? And a number which Mr. Kant has not mentioned, not that he's missed. It's rare that you miss a number in any of the presentations. India's IT export last year crossed Aramco's oil export. That is the strength of the sector right now. Walk us through the reality of the tech sector from your vantage point.
First of all, it's an absolute honor to be here on this panel with all of you and Mr. Kant. I was absolutely delighted to hear your presentation. Why? Because I think that was a phenomenal talk about the power of technology as well, right? I mean, the way you just outlined it, the growth that has happened in the last, you mentioned 8 years is equivalent to 50 years of growth, right? And today, if you look at it, that growth is only possible because of technology, right? I mean, you mentioned multiple sectors, be it agriculture, be it education, be it health, be it insurance. One thing that goes across all of these sectors, which kind of helps in the growth and the scale and the transformation, is technology. So if you ask me, Nikunj, India is an all-time high when we talk about technology. And if I just also look, I mean, unlike the hospitality industry, Puneet, for us, COVID, yes, it was extremely difficult times. But post-COVID, the kind of speed that we are seeing in terms of digital transformation and where companies are coming to us and asking us how quickly can they get transformed digitally is no more about, hey, 3 to 5 years. It's like, how can we do it today? How can we make sure that we stay relevant so that we are therefore they're in business at all, right? So that's the speed we are talking about. And if you just look at the India story, Nikunj, there are so many phenomenal examples of how India has transformed itself from a technology point of view. Earlier, it was just when we looked at India 20 years back, it was about cost arbitrage, right? I mean, if you just look at the larger patterns that evolved. It was everybody came to India for outsourcing IP that was created elsewhere, but to implement that IP, you came here. That shift has completely changed, right? It's the other way around. Today, 45% of the GCCs outside are invested in India, right? 50 to 60% of the positions when we talk about operations or core technology positions for the world's GCCs are happening right out of India. We're talking about IP creation from India for the world, right, as we speak. I mean, I represent SAP on this panel, and if I just look at SAP, 40% of our R&D across the world happens right out of India, right? Quarter of the IP that is made available for the world is happening out of India, right? So that's the kind of change that's happening. And today it's no more that, that you're looking at technology in the sense of how are we doing it for the change and all that. It's really technology that's happening here. Like UPI, Mr. Kant, is already being adopted in countries like France and Malaysia as we speak. And 30 more countries are lined up to talk about how they leverage UPI at that scale for their usage. Or if I look at areas like, I think as part of the G20 presidency, you're also looking at offering the entire 4G and 5G stack to the nations out there. So that's the shift that's happening. So it's not just about confidence, it's absolutely the right time in technology, Nikunj.
Yes, please.
If I may add, because we have a lot of people in the audience, obviously majority is from our company, 40%, 60%, but what is 100%? 100% of the catering at SAP happens from Taj. And thank you for that. And 100% of the support for Cumin, whether it's a food truck or virtual celebrations, also came from SAP. And the catering for the Chancellor, German Chancellor, also came from the Taj in Bangalore.
We're very grateful for the partnership.
No, thank you so much. Thank you for your support.
How do you see the convergence of the entire West versus East in terms of technology moving and changing in the next 5 years? Because you talked about UPI, Aadhaar, ONDC. There are examples where up until now it was West versus East, but now Western technology is actually converging in India. How do you see that moving?
Yeah, I think if you just look at the numbers, right? Today, India is the third largest startup ecosystem in the world, right? After US and China, we are number 3. And if you look at, I think, Mr. Kant, you mentioned 4 to 5 unicorns come out of India every single month. I'm talking about every single month. So the generation of IP, in terms of exponential growth, this has phenomenally changed, right? So earlier, to my points that I made, it was all about the IP being generated elsewhere and the implementation happening here. Today, it's completely reverted. And if I just look at also areas that Mr. Kant touched upon, like how can we drive this growth in a much more inclusive, much more sustainable, much more resilient way? Some of the top themes that every organization out there is looking into, like supply chain resilience. Given all the geopolitical challenges that's happening out there, India is, I mean, both from a technology point of view, but also as the kind of the neutral partner when you look at areas around growth, be it manufacturing or be it in the area of semiconductors. India is clearly the target, right? And this is where technology kicks in. Because unless you can leverage technology to look at supply chain routes, optimize supply chain routes, optimize in a way that you make sure when you look at processes like strategic sourcing, you want to source from the right supplier who's ethical, who's inclusive, who's following patterns on sustained growth, right? See, these are different areas which only technology can allow you to give that level of visibility. And this is where, again, with the growth that we are seeing across sectors, the infusion of technology into that sectors allow us to make it possible. Or if you look at an area around sustainability, today, I mean, we need to get it into the forefront rather than as an afterthought, right? And the only way you can get it into the forefront of decision making is if you're able to infuse sustainability metrics into the core of your processes so that a decision maker can at any point of time make those decisions on why you're going in a particular choice or not. But if it's an afterthought where you just say, okay, just let's report on those dashboards and take action later on, that's not going to happen, right? So again, those kind of technologies being built right from here for the world, addressing those core themes are happening as we speak. Puneet, you mentioned about the Chancellor's visit. The Chancellor was here because he wanted to understand those areas on how can we, with the technology that we provide, from the skills that we have, from the amazing talent that we have here in the country, help them get to some of those targets that they have set for Germany in terms of energy transition and many others. No?
Ridham, about 8 months ago, you've come out with a blue paper talking about that this decade belongs to India. To set the context, just for the audience here, 1980s was dominated by Japan, then the US big tech got created, then we saw China. Now we are talking about next 10 years, it really belongs to India. Why?
10 may be a conservative number, Nikunj, but we'll take it 10 at a time. I think this could be a multiple decade phenomena. We're just starting out. So I think Mr. Kant talked about dominating manufacturing. I think the path is already laid out. There are 3 things that favor India in terms of manufacturing. One is India as a natural destination for the world. It is going to be the best marketplace on the planet over the next 10, 20 years. If you just think about the Indian consumer, today our per capita income is around $2,000, $2,300. That could easily double in the next 7, 8 years. And when that happens, we will add about 20 million new consumers at the top of the income pyramid. This is exactly why one should be bullish on luxury tourism, okay? Because 20 million new customers, no place on the planet has that accretion happening. Now, these are the people who are going to be able to buy luxury cars, luxury goods. So you can see that. Louis Vuitton has got Deepika Padukone as their brand ambassador. I think last week Gucci made Alia Bhatt their brand ambassador. These are global brand ambassadors because this is the market for them. They have no other
Ranbir
option.
Kapoor brand ambassador for you, only tracking heroines, huh?
Sorry?
What is Ranbir Kapoor brand ambassador for? It's okay, it's okay.
So you can see that. Apple opened its first store in India. It opened its first store in China in 2008. China's per capita income was exactly the same as India in 2008. It was 1.6% of Apple revenues or 1.8% of Apple revenues then. Today, India is 1.6% of Apple revenues. So Apple sees it the same way, which is that in the subsequent 10 years, China dominated Apple revenues. So India will dominate Apple revenues. So one is that manufacturing companies globally have to be in this country because they need access to this consumer. This is the growth destination. The second is, unlike at any point in the past, and we've seen reforms in this country now for 30 years, we've never favored the entrepreneur like we're doing now. Risk taking has become, something which is far more abnormal. So I was telling this to a couple of government bureaucrats that the company in India, the corporate entity, pays a lower tax rate than the CEO. That hasn't happened before. The production-linked incentive schemes, we are taking tax dollars and incentivizing entrepreneurship. What we did in the past was take tax dollars and distribute to poor people. Now we are able to do that because the efficiency in distribution to poor people has increased dramatically in the last 7, 8 years thanks to India Stack, thanks to Aadhaar. So all those leakages have gone away. We have taken that extra resource and said, let's promote business. Now there's logic in this because when business gets promoted, investments get created, that creates jobs. What we did in 2006 when we passed Manrega was I think an error in policy because that was targeted to lift wages and therefore, create prosperity. But in a country that has excess labor, if you artificially boost wages, you create inflation, which is what we got, 2010 onwards. And we dealt with double-digit inflation, which took a long time to fix, actually. Now we have reversed the course. Now we are doing it the right way, which is create supply and therefore build prosperity. So that's the second thing. And the third reason is geopolitics. As Mr. Kant mentioned, the concentration of production facilities in China forces multinational companies to look elsewhere. They need to diversify. India is a natural place to go to. We have got much better infrastructure than before. We have a better marketplace. We have a better policy environment. So manufacturing is set to boom. It will surprise us on the upside. I think Sindhu mentioned about services. In 2021, our net services exports to the world was $100 billion. By the end of this year, that number will be at 200 billion. We have doubled it in 2 years. No wonder the rise in oil prices is not hurting the economy. The rise in oil prices is not hurting the economy because we have enough money now to buy oil as much as we need. And in fact, also what has happened along the way is that the oil intensity of the economy has declined thanks to things like ethanol blending. So some of these policies have not been understood well, especially by foreign investors in the equity markets. They have not fully appreciated how we are, transforming as a country. So that's one. The second is digital India, which is India Stack. I won't go into greater detail because we have already discussed it. But the one small thing that I'll add on to what has been said is that OCEN, which is Open Credit Enabled Network, which is a layer that's coming on India Stack, will revolutionize the way this country has done credit. So simple. Hitherto, credit in this country was done on the basis of a physical security. You put an asset on the table, the bank will give you money. Most of this country doesn't have a physical security to offer. What OCEN does is it makes information a security. Now, suddenly everything changes because even the thelawala sitting outside this hotel has got her information on India Stack because they're doing payments via UPI. They're paying their taxes on the India Stack, GST, income tax, all payment information, everything is contained there. So I consent to the bank uses that information and makes a credit decision. Suddenly, the amount of credit availability and the access to credit is likely to undergo change. Now think about this. Private credit to GDP in India is at 57%. China is at 200%. America is at 200%. Most of Europe is approaching 200. So 57 can go to 100. And I think it'll happen pretty quickly. But even if it takes 10 years, that's 17% growth in credit annually. And what is credit? Ultimately, credit is basically spending your future. This country has not spent its future. It is about to do it. And I always quote this. My father never borrowed money. I have never borrowed money. But my daughter is going to borrow money. She's going to spend her future. Okay. Now, of course, this will all end badly, but it'll end, that'll take 30, 40, 50 years. It's not happening anytime soon. Right now, it's going to lead to an acceleration of growth. It may continue for a few decades. It has still not ended in the Western world. And they've been on a borrowing binge for 5 decades. So it'll take time. So that's the second reason. And the third is the point that I think Mr. Kant mentioned earlier, this whole energy transition that this country is going through. It entails a massive shift in investments. This country right now, per capita daily consumption of energy is 800 watts. Okay. The US, for comparison, is at 9,000 watts. That's what 5 elephants would eat. 5 African elephants would eat in a single day. So that's the amount of energy that an average American consumes. And this is X food, by the way. If you add food, it becomes 9,500. So this 800 in India is going to gallop because what we have achieved, and something which has not been mentioned, is in the last 8 or 9 years, we've managed to get energy access for every single of the 1.4 billion Indians. Pehli baar. First time in India's history. Okay. It was not there before. So if you didn't have access to energy, how can you consume it? Now everybody has access. Energy consumption is intricately linked to growth. And it's a virtuous cycle. So we are about to start this journey. And fortunately for us, we're signed up to the Paris Accord. So a lot of that incremental consumption will happen on renewable sources, which will entail massive investments. And that's going to be another growth engine. So I can keep going on and on, but I have to keep pinching myself every morning. ठीक है, you're bullish, Ridham, but just, be on the guard. But it is looking really very, very good out there for India.
Why is Morgan Stanley bullish on Indian hotel? I read a report, I think 10 days ago. You've upgraded your target on Indian hotels.
On Indian hotels?
Yeah.
See, I think, I'll simplify this. I actually made a reference to this. When India today, right now, the average Indian, not the people in this room, we're way above the average Indians, earns about $2,200. Now, when you earn that little in terms of your income, bulk of it gets spent on roti kapda makan. Basic stuff, clothing, about $500-600 is what the average Indian saves, and what's left is $400 to do everything else. So in this country, sending your kids to school is discretionary spend. Buying internet connection is discretionary. Buying a tractor if you're a farmer is discretionary. Buying hybrid seeds is discretionary. People don't have the money to do discretionary spends. This will change dramatically in the next 10 years. When that 2,200 goes to 5,000, roti kapda makan will still be 1,000. Maybe you save 1,000, but now you have $3,000 instead of not 400 but $600. That math was wrong. So 600 goes to 3,000. Now suddenly you have the money to do things that you could not have done until now, which will include travel, leisure, which will include sending your kids to school. So I can't help being bullish on tourism. And I've always believed that India is one of the best places on the planet to do tourism. So this market, I think, is going to boom in terms of, in the next 10 years, we'll be at levels that I don't think we can even imagine today. And given the focus on the balance sheet, given the focus on return on capital, I think, this business should do quite well.
Mr. Kant has grabbed the mic before even I can question to him.
Well, I've been a great believer in travel and tourism for the simple reason that, India's demographics, your average age is 29. Even when India becomes 100 in 2047, your average age will still be 34. So you have very low dependency burden. And people are going to travel like anything. It's like in the 50s, the Americans were traveling with American carrying a flag, and Japanese were traveling in 70s and 90s. Chinese are traveling with the flag. This is the decade of Indians traveling. In a big way, you've seen this happening with Gujaratis and Bengalis, where all Indians will travel to discover India. And that is why domestic tourism is now booming. But Indians, will travel not merely domestically, they will travel all over the world. And I think they will become the biggest travelers in the coming decade. And that is why I entirely agree that the important thing is to keep highlighting that tourism is not a luxury sector. It is the biggest employment creator for India. Biggest employment creator. So, Kerala, why it worked after, all those trade unions that killed manufacturing in Kerala, we started supporting tourism, and eventually we got this tourism satellite account study done, which demonstrated that tourism had created the biggest number of jobs in Kerala, and that the largest number of jobs for women were created by Kerala tourism. And therefore, we have to keep telling politicians that why it needs an infrastructure sector is because this is the only way you'll create jobs in India. India needs to grow with jobs, and tourism is the answer for that. And therefore, my belief is that the next decade of India belongs to just three things: going digital, going green. And growing green, according to me, decarbonization is the biggest commercial opportunity for India, because India is climatically blessed. India can be the cheapest producer of green hydrogen from renewable energy. No other country is climatically blessed other than Saudi Arabia and India have the same climatic conditions. We can be the cheapest producer of green hydrogen and become the biggest exporter. And actually, we can be a net exporter. We import 200 billion worth of energy right now. We can be an exporter of energy by 2047 in terms of clean energy and export to Europe and America from here. So going green, because that will add value and that will enable you to attract capital. And the third, so go digital, go green, go travel and tourism. 3 big opportunities for India.
Actually, Nikunj, if I may just add, I think Mr. Kant made a reference to this in his opening remarks. So one of the bottom-up reasons why I think India is exploding is because of the transformation of Uttar Pradesh. So in February, I was in Kashi and it was bursting at the seams. Okay, so if people here have not been there, they should go there. I mean, it is completely changed. I was there in 2014, before the elections, and then I was there again in 2015, and then I went there after a break of 7 years, and it has changed. And I called up Puneet, and I said, sir, when are you setting up your hotel in Ayodhya? Because that's about to happen next year. So, we had that discussion. But Uttar Pradesh is the bottom-up reason why this country is changing, because until 5 or 7 years ago, Uttar Pradesh used to drag down India's growth rate. Today, it is lifting India's growth rate. When I talk to CEOs, and I ask this question all the time, that which is the state that is creating the greatest, greatest delta or the greatest murmur in your business, and the 80 or 90% of the CEOs tell me Uttar Pradesh. So I think, next is Bihar. Because if we can change Bihar, then I think we are on our way. Bottom-up reason, but just adding to the point that I made earlier.
Mr. Kant, the Prime Minister's vision is clearly that tourism needs a boost. The Finance Minister in the budget speech, there was an explicit mention to tourism. You mentioned women empowerment, something which I think Indian tourism sector is creating. But then I go back to Mr. Chhatwal's point again and again, why is the sector not getting the infra status?
So, problem with the travel and tourism industry is that it has, it compartmentalizes itself. There's a travel agent association, there's an Indian tour operator association, there's a hotel association, there's an FHRAI. They should all get together, speak with one forceful voice that we are the biggest job creators in India. Why will it not happen? It will definitely happen. And I'll become their ambassador to make it happen. But they should all...
Yeah, Mr. Kant.
No, but you see, I think Prime Minister is very clear, and he keeps saying this, that we must also understand that tourism is multi-sectoral. It's multi-dimensional. So that everything that India is doing right now in terms of creation of roads, ports, airports, all this growth of airlines, the people traveling, new airports coming up, so many of them, railway station development that is happening, all this is actually being done for travel and tourism. You can't look at tourism in isolation. Tourism is really the growth story of India, the infrastructure story of India. If you're making 55,000 kilometers of roads, if you're creating vast expressways across Uttar Pradesh today, that is the story of tourism. You're opening up hundreds and hundreds of new destinations for India. That is it.
Last round, and I'm going to keep this same question for everybody. Ridham, how do you see the next 3 years of India, or for India, moving differently from the last 3 years? Next 3 years different for India from last 3 years.
Last 3 years?
Yeah.
No, last 3 years were very challenging. I mean, 2 of them were COVID years. We were in pretty tight spots. So I think the next 3 years look very encouraging. The corporate profit share in GDP has doubled from around 2% at the low point in 2020 to 4%. I see that doubling again. So I think corporate profits will be very strong. That will lead to a major capex cycle, and that should create a much higher growth rate than what we have experienced over the past few years. I think stocks will do very well, since you want me to talk about stocks. And yeah, I think we'll feel like, we'll feel more prosperous than we have felt in a long time. So it looks quite optimistic. The key risk factor is that the Western Hemisphere does not slip into a deep recession. It will hurt us in the short run because we do export 20% of our output. And therefore, if the Western Hemisphere experiences a recession, there'll be a pullback in spending. There'll be some slowdown that India will have to experience. Our domestic economy, I think, will be remaining resilient. I mean, I don't know if people here track the manufacturing, the PMIs, both services and manufacturing. I mean, just compare and contrast the economy in India versus the economy in the rest of the world, and you'll know the difference. But some scarring may happen if there is a recession in the world. But otherwise, I think it looks quite encouraging.
I think, Mr. Kant, the right word is Amrit Kal. The right word which the Prime Minister has used and the Finance Minister referred to Amrit Kal in a last budget speech. I think the word for India, if I would say next, not 3 years, but next 30 years is Amrit Kal. I will be right?
Well, for us to get Amrit Kal really means, to my mind, consistent level of growth for next 3 decades. And next 3 decades means basically 2-3 fundamental issues. That every time India has grown, it's grown when exports have grown. So you have to be an exporting nation. You have to penetrate global markets like services sectors run, in manufacturing, in agriculture, many other areas. Without penetrating global markets, it will not work. That means you have to create global champions. I mean, global champion means that you have very few large companies. You have to have thousands of large companies which will create tier 2, tier 3, tier 4 manufacturers. Automobile sector, it happened because Maruti came in and produced tier 2, tier 3. Now Tata Motors has created tier 2, tier 3. So you need thousands of these companies which will create this. So what PLI does is, when we worked on production linked incentive, what we said is that we want to create global champions. And global champion means that we'll support you for 1 year, take your production from here to here, here to here, here to here, here to here in 5 years. And in 5 years' time, we'll make India the most efficient economy in the world and create 1,000 global champions. That should be our ambition. That should be our hunger. If you achieve those, then India is bound to boom in the coming years, and Ridham Desai's predictions will all come true.
How do you see, in your understanding, the next 3 years would be different for India from the last 3 years? I mean, I'm slightly disappointed to say that आप summer holiday में Germany जा रहे हो. You should have stayed in one of the Taj properties only.
No, I think just to add to everything that was said, Nikunj, if I just look at the next 3 years and the focus that Mr. Kant talked about, right? All those things can only happen because if you just look at the 1.4 billion people we have in India, 60% of them still live in rural areas, right? So in terms of we are still very heterogeneous in that sense of how do we get that access, get the education, get the awareness to all parts of India, of course, infrastructure and all that. So I'd say also what is very important is how do we focus on our talent, right? That's, I think, fundamental to growth because everything that we have talked about, be it services, be it technology, be it finance, only is possible because of phenomenal people. And we are in this position also because we have great people who have really taken the strides forward. So I'd say a lot more focus on upskilling of our young talent from India is very key for our growth, very key to stay focused on the goals that we have set for ourselves. So I'd say also having that strong interlock between the government, between the industry, between the academia, to embark our youth very early on in that journey and get that deep domain expertise across the various sectors that we talked about that drives that growth is absolutely crucial. So yes, we are on an all-time high. Next 3 years looks very promising, but if you want to stay completely focused, we need to build up that skilling. We need to kind of drive that youth to also drive that momentum forward.
So that's India for you, that's Startups for you, and that's a good work of the team and brilliant of your employees here. So thank you very much, guys, for inviting Nitina over, and thank you very much. I started by saying that there's nothing Amitabh can't do, and I stick by it. All of us will work together. I'm sure, Mr. Kant, we can make India the most competitive economy in the next 5 years. Thank you, guys. Thank you very much. And thank you for being a lovely house.